11:35 on the Big Show clock. Bob Quinn on the Big Show today. Being brought to you by Des Moines Iron and Supply, over a century strong. Keeping Iowa working one job at a time. Big thank you to Des Moines Iron and Supply. Yeah, anybody that's been around for 100 years been doing a pretty good job supplying agriculture. Big thank you to Des Moines Iron and Supply. In fact, looking forward to maybe getting the Des Moines Iron and Supply guys a little more familiar with the Big Show Garage. We have some things that we would like to be doing with the Big Show Garage. We may be doing a little shopping there with the folks from Des Moines Iron and Supply. And, of course, big thank you to our presenting sponsor for the Big Show Garage again this year, is the gang from Titan Tire. They were on the road down to the Louisville Farm Show here this past week. So lots of big-time machinery displays. I'll be off to Commodity Classic next week, speaking of a lot of things going on. Biggest newest in seed agriculture. How's that sound? Technology in the bag. That's what we're going to be talking about next year, or next week, rather. We're going to heavy up on some things going on at Commodity Classic, meeting for the National Corn Growers, American Soybean Association, sorghum growers, wheat growers, conservation districts, all meeting at the same time during the Commodity Classic. Well, let's talk markets right now. Brian Hoops on the telephone line with us, Midwest Market Solutions. Brian, we have a downward day in soybeans. We're going to be talking with our old buddy Joe Kearns coming up here. Just came back from a trip to South America, and he's been looking at the crop there, and that seems to be what is putting pressure on our soybean market again today. Brian, what's going on the beans? You've got November down 3.5 cents.
Yeah, we didn't start that session that way. We have turned this way going into the mid-session. We were actually higher overnight, pushing into some new highs for the move in the soybean market, and it's just been recently that we started to turn lower. Soybean oil had been the upside. We were hitting new contract highs in the overnight trade and early this morning. Now, some of the support came from surging crude oil futures, which were a couple dollars higher overnight and have actually added to gains in about $2.50 higher right now. But most of the strength is coming from kind of optimism that President Trump comments made a few weeks ago about China buying additional 8 million tons of soybeans. And ever since then, the funds have been stepping in, buying soybeans and pushing the market higher. But today it seems like the buying has faded, and actually I think we've seen this market turn into some profit-taking, which is putting that pressure against the soybean market. The weather we alluded to in South America, it looks really good. Getting rains where we need them in Argentina to help stabilize the crop that's still growing, but not much rain in the harvest areas of Brazil where they are trying to harvest, and they are running behind because of some harvest delays earlier this year. Corn and soybean harvest is 4 or 5% behind the normal pace. Corn planting, which is done right after that soybean crop is harvested, that's also just slightly behind the normal pace, but it's pretty early yet as far as their harvest and planting season go in Brazil.
Right, it might be time to take advantage of some of these spikes in the market. I mean, what are you recommending for looking at sales of maybe new crop for corn and beans? Anything yet?
Yeah, absolutely. I think there's some opportunities, and want to take advantage of them while we can. Not every year is the same as the previous year. Last year we had some highs put in during the month of February, and never did have any weather issues to challenge that. So you want to think about that. Maybe our highs are going to be put in earlier this year, earlier than normal, very possibly anyway. We are establishing the crop insurance guarantee price, and it's hovering right around that $11 mark, which is about almost 40 cents higher than it was last year for soybeans. And corn, I think, is just a couple pennies cheaper, but we still have a few days yet to establish that guarantee. A couple of days ago, December corn traded as high as $4.64. I have been saying if you get to $4.65, $4.70, those are some opportunities to get started on some marketing if you haven't already. And November beans above $11. It seems to me that this is a point where, with the big crop from South America, expectations we are going to plant more acres here in the U.S. this spring. Guys should be looking at that. So we traded as high as $11.24 this morning. There's a lot of resistance up at 1130. I think there's some opportunities, even though it's real early in this growing season, to start pricing some new crop corn and soybeans.
We've got the Outlook conference going on, I believe, tomorrow and the next day in Washington. Now, a lot of reports come out, and you got to kind of dig deep into some of the economic reports. But I believe the USDA is going to give us a glimpse of what they're projecting for cash prices, and maybe even a look at acres. What are you looking for out of the Outlook conference?
Yeah, acres is kind of what everybody's going to watch, because look at what we may say, what the USDA may say at the March 31st Planning Intentions Report. The trade's expecting corn acres to be just about 95 million, 94.9. That would be down 3.8, 3.9 million from last year, with soybean acres increasing from 81.2 up to 84.9. So that's an increase of 3.7 million, and wheat acres likely to retreat just a little bit, maybe about 500,000. And right now it's kind of a crapshoot. See, what do you use for yields? The average trade guess is 51.9. That's probably just going to be a little bit less than the trend or what the USDA is going to say. They're probably going to come in 52 or 53 when they start issuing their yield numbers. And for corn, the average trade guess for tomorrow is a yield number of 183.3, which again is probably going to be a little bit less than what the USDA starts off with when they give their numbers. So we could have very similar ending stocks for corn, soybeans, and wheat than to what we are seeing right now based off of these planted acres, unless we get some sort of a weather issue this summer.
Well, Brian, we're going to let you go for an hour and 10 minutes and get back and maybe kind of zero in on these projections again moving forward. In the meantime, folks want to find out more about what you folks are doing. How can they do that?
Yeah, you can reach out to us through our website, MidwestMarketSolutions.com, or you can always go online there and or give me a call, 417-501-5132. 12:55
here on the Big Show Box. Brian Hoops, Midwest Market Solutions, wrapping us up today with a look at the marketplace. Brian, we want to capture maybe some high points in this market, like what happened overnight in soybeans. You've given it back now. So what are you looking at as far as a marketing strategy over the next couple of weeks, corn and soybeans?
Yeah, Bob, I think the markets do want to try and buy a few acres, and they're going to do that with the crop insurance premium that they're adding in for this month to get that average price for our insurance guarantee. They're also going to do that, I think, by trying to rally in early part of March, kind of secure a few acres. There is some talk that maybe we don't back off corn acres like the trade is expecting. We're expecting 3 to 3.5 million acres being shifted over to soybeans. There may not be that much of a shift, and so soybeans got to buy those acres from the corn market, and we can't do that if we turn lower. I think these prices probably turn back higher, head up towards 1130. There's maybe some opportunities there to start locking in prices either through option premiums or just cash sales to at least get started on your marketing program. So I would expect, this isn't the end of the road. With the technicals being higher, we're probably still going to try and push our way or eke our way higher as we go into the last part of February, early part of March timeframe, and make sure we get those acres seeded.
Do you think we're going to see possibility of soybeans taking acres from other crops other than corn?
They could steal a few acres, but I think it's going to be hard. They want to because they need to because of the Chinese demand. But what other acres can you steal from? Maybe some of the wheat that hasn't been planted, some spring wheat. In the northern parts of the Corn Belt up in North Dakota, Minnesota areas, some of those acres certainly could go from spring wheat or sunflowers or something like that over to soybeans. That's a real possibility. A lot of the winter wheat crop, is in pretty decent shape as far as going through the winter months, so it's unlikely that'll be ripped up and planted to something else unless there's a real price incentive to do so.
This is the time of pricing crop insurance targets. Have you been keeping track of those?
Yeah, we're watching those fairly closely. I don't have the exact numbers, but I think we're at least $30 an acre better for soybeans right now. 30 cents a bushel, I should say, for soybeans right now. Corn is virtually even, just a little bit behind last year's price level, but that soybean guarantee is getting very close to $11, just a little bit below that.
Yeah, I was kind of thinking in the back of my head as well. Hey, Brian, folks want to talk with you, talk markets. How can they do that?
Yeah, you can reach out to me directly, 417-501-5132. You can also follow us on Twitter, Midwest Markets, and at Brian Hoops.